Jimmy. We'd like to call the work session to order. We have quite a long agenda that we have to go through. Monica Ross Williams is running late, and so is Jimmy. The first item is a 2017 financial audit review. Raina Emmons is here. There's fine, yeah.
How you doing?
Oh, there we go. Oh, that's green, red, good, okay. My pleasure tonight to bring to you the Charter Township of Ypsilanti's audited financial statements for your fiscal year ended December 31st, 2017. I have a very good report for you this evening. And I'm going to jump right in. You've got an agenda ahead of you there, so I'll talk quickly, and I'm happy to answer any questions at the end. Starting off with the general fund, the worst part about the general fund is we have no control over our revenue streams, really. But I've got a good report for you tonight, because property taxes, we don't have a lot of control over our taxable value, but our taxable value was up 1.1% this year. It was up 2% the prior year. So we even call that a trend. I mean, we'd like to see the positive, even if it's 1-2%. That's a good thing, especially where we've come from in the past. Also, state shared revenue, another source we really don't have control over how the state distributes that. I mean, they do have formulas, but how much comes in on income taxes and sales taxes is really dependent upon the economy, and that was up significantly this year. This was up 7.7% over the prior year and what we got in state shared revenue. That equates to $348,000 more this year over the prior year, and that's some extra things the state handed out, but also sales and income taxes were up. So that trickles down to the township, and we'll take that. We had a few sources of income this year in this audit in the general fund that were let's call it a windfall, but indulge me for a minute, because I really have to acknowledge Mr. Winters. He helped facilitate a lot of this. We had the $1.1 million settlement from the Nexus pipeline. We had $700,000 from the Monarch Towers cell tower, and the American Center for Mobility also contributed an additional $300,000 this year. So that's all direct impact to the general fund. The board made some really good decisions with that, and you paid down some of the Seaver Farms debt with some of that money. And I just pointing it out, it's not accidental. This is what Mr. Winters spends a lot of time on, and it really pays off for the township. So, just a quick thanks to him for his great work. There is a breakdown of the general fund balance. So we did add to the general fund balance this year. Let's see. So if you go to the general fund budget to actuals, all the way in the back, page 64 and 65. So we ended up adding 1.316 to the bottom line of the general fund this year. And that had to do with some of those extraordinary things that were one-time things this year. On page 42 in the middle in the footnotes, we break down the total fund balance in the general fund is we ended at 6.7 million, but we have 4 million of that we've really assigned or earmarked for special projects and improvements within the township. So it's not that it's not spoken for. You do have plans for that money. So the general fund did really well. The other funds were pretty much break even. The ones that went a little bit negative, maybe 3 small funds, it's really minor. I don't even call it break even, not even negative. So nothing that you need to be concerned about. No surprises there. The building department activity increased again. So last year I told you building department revenues From inspections and permits, we're up $200,000. Well, we have another $200,000 this year, so on top of that, we had another increase. So we've got some activity here, as I know you suspect and that you see around the township, but it really does come into the numbers. So, we did have significant increase again this year in the building department fund. We had we did come in under budget in the general fund. You came in $940,000 less in expenses than you had projected. 250 of that were capital projects that weren't, you didn't spend all of it this year, but the rest of it was really just being very mindful. And, if you go line by line, it's not any big thing that made up that savings. It was really, $20,000 here and there in different departments that you're really watching the bottom line. So that really does show and does pay off. That's how we came in significantly under budget this year. It wasn't one big thing we didn't do. It was a bunch of little things that, everyone just watching and being mindful and not just spending money or, your wages have stayed pretty steady. Your operating expenses have stayed pretty steady, which is great. It's allowing you to do a lot of these capital things too. Your major capital projects this year, about $2.4 million in total. 1.6 of that was the Tyler Pond and Dam decommissioning, that pretty big project. And we had some road improvements, about $250,000 in that. So we did major improvements. We also paid down a bunch of debt. We paid $1.58 million down in debt. Some of that are your annual required debt payments, but some of that, like I said, we took some of that windfall money and put it down on the debt. So we paid down probably an extra $800,000 in debt, just, knocking that right out. We had no new debt, and then we significantly paid down the debt, which is great. Other major areas, the pension plans. Fire pension, what you paid out in benefits stayed about the same as the prior year, but we had some really good investment income this year, and a lot of that is the market from the prior year, and so that's paying off. And also in the township, the administrative pension for the employees, you had significant increase in your investment income. I mean, it almost doubled from the year before. So again, the benefits you paid out stayed about the same, but we did so much better on the rate of return on the investments that's actually lowered your net pension liability. I mean, those are the big things that really impact you. Either your expenses are going up, but you're not. You're staying the same on your expenses, but but what we're making on investment income is helping our bottom line. So with that, if there's anything I didn't cover that you're interested in, or I can answer any questions, I'm happy to do that.
Just if we could go back to the three funds that were a bit of a concern to you, are those?
No, that's not the word I used. I said they were negative. So expenditures exceeded revenues in those three funds, and I think I might have even written down what those were. But I could tell you really quickly. Oh, the Recreation Fund,
Right.
the Building Rental Inspection Fund, and the Environmental Services Fund. Perhaps even, I should look at and the golf course. Well, actually, we transferred some money in there, so they actually came out good, or at least break even, I should say. So those were the ones that, and they're not significant dollar amounts we're talking about, that they're negative.
So,
Madam Chair.
let's finish this thought just for a minute. So, like the golf course, it was projected that we would take money for those capital improvements from the SNR too. So do you see that as negative? I'm trying to.
No.
Environmental service was the same way.
But we didn't,
I'm trying to figure, I don't know what page you're on.
okay, so if you look at page 16, the Environmental Services Fund is the third row over. You have 2.48 in revenues and 2.55 in expenses. So you came out negative 77,375.
But we did a budget amendment to accommodate for that.
Oh, but you're not over in budget, you're just that you actually,
Okay,
the expenses exceeded revenues. So you didn't add to the fund balance, you just took away a little bit.
right.
So you knew about that. If you did a budget amendment, that means you planned for it. You knew about it. It's not
Right, it's not
a
it's not like
surprise.
we're operating without knowing we're going into fund balance.
Correct.
Especially if it has
Correct. It's
a larger fund balance.
right.
Yeah.
Most of the time you plan for that. This, you plan to dip into fund balance a little bit, not,
Right, okay,
Yeah.
I just wanted to make sure, sorry.
I guess I'm trying to phrase the question the right way. Not to put you on the spot. How long would you expect to see a fund not generate revenue or break even on its own before you'd become concerned and action has to be taken one way or the other to do something?
So I would look at whether it's operational expenses that are making it go negative, or are they capital projects that are making it go negative? So capital projects, this board's done a really good job of planning for them and budgeting for them. And they don't just come, oh, we need to fix the roof. Suddenly it doesn't really happen like that here. We're fortunate that way. But if it's operational expenses, things mostly, your biggest operational expenses are salaries and fringe benefits, truly. That's what I would look at. I mean, if everyone was getting huge raises every year and suddenly your revenues couldn't keep up, we also don't have that issue here. But that's what I'd be looking at, operational versus if it's a capital, those are capital projects we're trying to get done, and maybe we plan on whittling down the fund balance. That's okay, but I'd worry more about the operational side. So number of years, there isn't a magic number, but, you know what your comfort level is as far as how skinny that fund balance would go before you start to become uncomfortable. And it matters whether it's a property tax, millage that's funding it, whether it's the general fund trying to fund it, the funding source, or fees like the building inspection fund, those are fee-based. So it all depends. How's that answer?
Thank you.
Is there a specific department?
Well, just the ones
general?
you mentioned, at least from where I'm sitting, most of those are operational. They've been ongoing for most of the time I've been on the board, which is in excess of 10 years. So at what point do you go, okay, maybe this fund is never going to generate revenue? Is it one that we continue to maintain and lose money on and have to take from the general fund? At what point does that discussion have to be held to sit down and honestly look and go, can we continue this non-vital service? And I guess
I think
vital
he's-
is
are you
a
talking about the
definition
golf
anybody could use. No, actually I wasn't.
I know, but I want to know which one, so we can help address it.
Recreation, golf, anyone that's losing money, to me, is a concern.
But we transfer money from BSNR 2, which is Bike Path, Sidewalk, and Recreation Fund, to help fund those.
I guess I'm just getting to the point, when do we quit aiding them to get them to even every year and expect them to maintain their own?
Well, so we're negative $6,200 in the recreation, just as an example this year. $6,200, I would call that break even. That could be up or down with a program. However,
Did we add money to that, though?
we did transfer it, yes.
That's right, we transferred in.
Yes.
Correct.
So respectfully, it is a board decision
Right.
on what,
Okay.
and really budget time is when you talk about that, is,
Right.
where do we want to go with this? Do we want to continue to fund it? Do we want to, do we want to cut it in half? Those are the, do we not want to fund it anymore? And then you make decisions accordingly, because obviously that would be probably staffing changes. Maybe there's a big project that they were going to do next year that maybe they shouldn't do. That's why that's the appropriate time.
Yeah, I didn't
really.
want to put you in, I guess I was just looking for a best practices.
Best
type
practices
answer.
at budget time. Take a look at that, and that's an excellent question. But that's why you want to look at it then, because it impacts other things at the same time. So if you decide that you don't want to fund that fund or only want to fund half of it, it impacts other things, their expenditures that, maybe you move employees around other departments, maybe you don't, buy that vehicle, maybe you don't, so that's really, and again, it's, the board's decision on where they want to go.
Yeah, thank you.
And what's weird about the recreation is that we have a BSR 2 millage, but we don't put those departments under there. We transfer out money to them. You know what I'm So,
Well, so the golf course, I mean, historically, it's, the reason you do that is keep them in separate funds, is so that you
Right.
can keep track of them from a
Right,
historical perspective. How did the golf course do from year to year? And, sometimes we even bring out the calendar during the audit and see, was it a rainy April and May? Was it, was it warm in October, they were still golfing? And we kind of look at the trends on your revenues. Because expenses we can kind of keep contained, but the revenues we don't have control over as far, if we have great weather in the spring and in the fall, then we can golf longer and we can collect more revenues. But, if the weather's against us, we're probably going to see a drop in the revenues. And, one year might be good, the next year down, and you might see this up and down from year to year. So that all plays into the, the historical trend, and you can't do that if it's buried in the BSR fund.
Madam Chair. I just wanted to say thank you. You guys always prepare such a easy to read document, and you're
thank
always
you.
approachable and easy to ask questions with. So thank you for coming and for working on this.
Oh, and that's anytime.
I just had a comment. I know on the golf course, I think it's one of the things that we always struggle with, because I know that we have to balance, or we have to core depreciation, but if you put the depreciation together with, because we did some pretty heavy-duty expenditures there this year and you put those together, that pretty much covers the 200,000, because it's 133 and I think purchases.
Right. So-
And the 89,000. So and I know we're not supposed to on accounting kind of principles, but if, in my logic or my head, is like if we're losing money over and above that, then that's when I get really concerned, because if you take the 133 and the depreciation, that almost matches exactly what the
Right.
expenditures over revenues was.
Right, and the way that the golf course and the compost are recorded, they're enterprise funds, so we bury the fixed assets, the debt, everything gets rolled into those funds, where they're not rolled into the other funds, like the general fund or the recreation fund. So you do have to look at that differently, and honestly, I
cash
bypass,
flow.
yeah, exactly,
That's
I
what I look
bypass
at.
that whole balance sheet. It's nice to see, of course, it's important. The income statement, okay, from year to year, it's nice to compare your net income, but truly, I look at the cash flow statement on those funds and see how we're really operating. And, are we really bringing enough money to pay everyone's salary and the golf carts and everything else?
Stan?
Before it hits the minutes, I wasn't going after any specific fund, golf or recreation. I was just asking the question. But now you brought up enterprise fund. Why do they stay in an enterprise fund? And if they do show a deficit for X amount of years, should they come out of that enterprise fund? Because other municipalities around us have removed funds from that enterprise after they've lost money for, I think in the one case I just looked at was 5 years.
Okay, without getting into the governmental accounting standards and all
Sure.
that lingo, putting in an enterprise fund means that the township intends to use the rates that we charge for the rounds of golf and the rental of the carts. Or the compo. We expect the rates to meet or exceed our operating expenditures. So fixed assets are another thing. Like I said, they're recorded differently, so we don't actually expense the whole thing. If you buy a piece of equipment, it gets put up into fixed assets, and then we depreciate it, like Karen was saying. So that gets done gradually. So again, going back to our intent is for our rates to meet or exceed, basically for it to pay for itself. Run it as its own operation, that it'll a standalone. Now, you can reclassify it as, say, a special revenue fund. In the case of the golf course, that would be the other option. But that would be, what's your intent? Do you intend on funding the golf course? Actually, it's a great lead-in from what you were just talking about with the budgeting and the, how long, and, that's when you put some consideration to that is, if we do plan on funding it, we just think we're not going to, the rates will not exceed the expenses for a while, or maybe never, but then you would consider moving it to a special revenue fund.
So any fund or department where we take revenue or fees could be designated an enterprise fund?
Yeah, so even
Any
like,
of them,
well, so not if it's millage money, like if you have a dedicated millage, but if, for example, you're the building inspection fund,
Sure.
you're taking in permit inspection fees.
And then you could depreciate the equipment there as well.
Yes, you could reclassify that special revenue fund as an enterprise fund if you felt that that's pretty much always going to, run in the black and it's going to carry itself, and we're not going to have to fund it. But, again, that type of fund, and it can, the state treasury puts that either or, a fund like that, enterprise or special revenue fund. It really depends on, do you intend for it to be a standalone? Now, something like a building fund, we see some really good years, we see some, activity, but then there could be years we don't, and it could be a long run. It could be 5 to 10 years we don't, but we're still going to pay those people's salary, and we're still going to fund that department. We still want a building official. So you're always going to have those costs. And it's not the township's intent, I would think, that you're always going to cover that. You're always going to make them whole.
Well, I would echo what Heather said. Thank you for doing this every year. I mean, it's
Oh, no,
a wonderful
I-
job, and thank you for entertaining my silly questions.
Not silly at all. Actually, great question.
Any other comments or questions? Fund balance for we try to stay between 10 and 20%. I know some funds we went down to 10%. How did we end this year with overall?
And when you look at the percentages, you're really, when you talk about those percentages, you really should be talking about the general fund. Because the other funds, it really does depend on what their revenue source is. And, millage funds, you don't necessarily, something that's purely millage, and you're just going to use that millage to fund whatever it is. I don't know that you have to have a certain percentage in there. It's really the general fund you're looking at with having certain percentages and, kind of a rainy day, and what if our revenue streams got turned off? Do we have enough to keep operating the township for how long? Some boards it's 3 months, some it's 6 months, some it's a whole year. So that's where that percentage comes in.
We try to do it in every fund.
That's great.
That's,
You put a lot of thought into your funds, and you don't just look at the general fund. I mean, that's what makes it great that I can come in with a good report. I don't come in with any surprises because you've already made the decisions during the year. This isn't the first time you're looking at your numbers. So, and you've got great department heads that keep on it also. So, that's how we get to know surprises. So you are putting a lot of thought on a regular basis to your special revenue funds. Most communities just they look at the general fund, probably the enterprise funds, and everything else is kind of automatic. So we don't do that here. You guys do a really nice job of looking at things on a regular basis.
any recommendation, Oris? Do you have any
Yes, sir.
recommendation?
Well, I'm out here, or I'm on the phone at least, with department heads on a regular basis. So we don't have the conversation once a year. We talk, there's new GASBs that come out regularly, there's new the state's been crazy lately with all these new, a retirement form, a qualifying statement, a this, a that, so left and right. And so we work together and handle those as they come up, and literally, in 10 days, the state could come out with some new form that, when we want it by the end of the month. And we all scramble and go, okay, we got to figure out what they want. So it's an ongoing thing. That's why we don't end up with a big laundry list at the end of the year from the auditor saying, we want you to change this and we want you to look at that, because we're talking about it on a regular basis. And I guess while we're on that topic, it should, this year, especially challenging year, I think, I really would like to say a special thank you to Christy Troy, who really picked up the ball and ran with it this year. Property taxes, having to learn that on the fly like that, that's like learning a whole new language. Right. That's like, so just a special thank you. She did a great job with it.
Good, thank you.
Madam Chairhead?
Yeah.
Just one clarifying question, if it's okay. Okay, about the enterprise fund, I may have heard it wrong. So I just want to make sure that if I did hear it wrong, I have a correction. that millage-related funds cannot go inside an enterprise fund?
Because a millage isn't a rental or rate, that you're charging like a service fee. It's a user rate. It's not a user rate.
Okay.
The millage money is a tax, and there's a very big distinction between tax and user rates.
Okay.
So you would not use a millage fund as an enterprise fund.
Thank you.
So we're working on this year's budget, so we can have those conversations like we do every year with any concerns with other budgets that we have,
Well, you obviously, I can see at year end, this year end, when I'm looking, I do look at the following, the subsequent year's budget when we're looking even at auditing last year. And so that's how you've already earmarked things for the new year. It's not like we've got this pot of money in the general fund and we don't know what to do with it. You've put thought to it, you've made plans for it, that is the responsible thing to do. You've done a nice, that's what
I did hear that they're changing the state, I guess, on the actuarials, and the investment rate is going from 7.5% to 6%, which causes,
No, they can't go to 6%. Not realistically. That would be.
that's what Giovanna,
The
have you heard this?
Not that specifically from the state of Michigan. The
Actuarial.
Okay, so nationally, what the actuaries are doing is they're more in the 7 to 7.5 range. Nationally, you would see the average. That's what they're using.
That's where we're at now.
You're at like 7.5 now.
Correct.
And it's actually, just by dropping it from 7.5 to 7, that's a big drop.
I know. And
You know,
it
that-
causes our payments to go, our annual.
Exactly. That's why I think they've been trying to do it gradually. So 6%, everyone would be having, everyone would be under bankruptcy, basically.
Well, yeah.
Yeah, no, and in fact, I think the state would probably step in at that point and go, no actuaries,
So
no.
do you know what they're moving it to? Because we have some, for next year in our budget, and it's increased because of the change in the interest rate and the investment projections.
What they're using the balance.
Yeah, it's crazy.
Just a couple years ago, they changed all the assumptions on those actuarial reports.
For ages, for like age, right?
Yes, yes.
But now they're changing it for investment projections. They did a look back and some rolling, they flatten it out, they do all kinds of things.
They did a longer spread.
Right.
And now they're doing it shorter because of everything that happened with their prices that were so.
Well, they know.
Well, but they've been justifying their 8% for a long time now. We've been all standing there going, really, 8%? And they go, oh, yes, we have the, the charts to
They're
prove
adjusting
that. And that's why they just gradually brought it down. As they did 7.75, then they're moving to 7.5. I would actually be very surprised.
I heard 6.5. We were told 6.5.
Madam Chair.
Larry?
Yeah, actually, they wanted us to, with our MERS, they wanted us to go to 6.25, and we had to redo our whole fund balance of what we were taking in, and not fund balance, but our projection on the percentage of where we were putting the funds to get it to 6.5, which was going to cost us probably about $300,000 more investment of going to the 6.25. So we were going from 7.25 to 6.25, and we had many debates with the actuary folks. And finally, by rewriting our projections, we got it back to, they agreed to go to 6.5, which still is about $300,000 more that we have to put in to that fund.
I'm actually very surprised to hear that. Those numbers, 6.25, 6.5%, that's, I would, I'd like to look at that tomorrow. That's, it is.
That's what Attorney Winters said. He didn't agree with it, but that's what they've told.
And I have yet to see that anywhere. We audit probably 40 communities in southeastern Michigan. I haven't
just
seen
came
that
out.
before.
Well, there's something they do. They write, I forgot what it was, and I know Giovanna and Karen's not here, but it was a non-clean writing or something that the actuary does, which then has the state come in and start pushing towards our retirement fund. So
And before they would do something like that, before they drop you that low, they would tell you probably, MERS typically comes in and says, hey, listen, your percentages are getting, now this isn't the case for you, but I'm just using an example. They would say, hey, your percentages, we'd love to see you a little more funded than you are. So would you consider doing either a lump sum contribution this year, or maybe, like an extra 20 grand a month for a year kind of thing? That's more typical of what they would do than drop your, your rate of return.
And we made those suggestions, and they absolutely fought us on it.
We're budgeting for 19 for the new numbers.
Okay, I'd like to look at that, starting tomorrow. That's something that should be looked at.
Maybe we should have called you.
Figure we'd pay the actuarial company, but yeah, to have your ask questions, that would be great.
Yeah, thank you, Madam Chair. Which is my question, actually. I'm glad that discussion came up because I know I saw today is that interest rates are supposed to go up, possibly at the end of the month. And then there's supposed to be anywhere from one more interest rate increase this year and possibly up to 3 to 4 in 2019. So how does that impact the discussion that was just had, right? And then also, how does this impact, basically, might as well say, the financial report statements, things of that nature? I'm just curious. It's just a curiosity question.
Oh, sure.
Yeah.
What the pension plans are invested in have to do with the overall market, because they can invest in things much more aggressively than you can, let's say, for the general township. So they're in mutual funds, they're in bond funds, they might even be in real estate. Because their parameters are much broader than ours with the general money of the township. So that should help us, and also keep in mind that our actuary report is about a year behind where we are. So this is the 2007 12/31/17 report, but we're using 12/31/16 numbers. Okay. So, it takes a little bit, it takes about a year to catch up with what you see in the market. It's going to be, there is a lag of about a year before you actually see the impact. But things like throwing extra money, which you actually have done, to the pension plan, that is it's still a bit of a lag as far as seeing a positive result, impacting your pension liability, but it seems to be a little more direct impact than because the market itself is, pretty broad as far as what the rate of return is.
So just one more question. So since basically the reports are behind, year date, are behind a year, right? But the market impacts are right now. Should you plan ahead, right? And be, I guess you could say, a little bit more prudent, because again, if the volatility is going to impact probably the financial statements from, I'm assuming, where we're talking, this is 2016, so 2017, 2018, we're actually talking maybe 2020. Do you think you should be a little bit more prudent, take less risks with?
Well, two things. So we're really at the mercy of the actuaries. That's why it's so important that we come to an agreement with because theoretically, they say the board tells the actuary what percentage to use. But as you just had this discussion, the actuaries say, hey, we're certified and we are only comfortable using this percentage. So that's why you have that discussion, almost a negotiation. Didn't used to be that way. It is now, evidently. It's everyone was usually on the same page, but now it's getting, that swing from 7% to a 6.5% is big. The other thing, so one is we're at the mercy of the actuaries, and two is the state now has been monitoring the municipal retirement funds a lot more closely. And as I alluded to before, new forms, they came out with a new form January 10th this year, said, hey, from this going forward, we want you to report on your post-retiree healthcare funds and your pension funds. They came out with this form. No one knew how to fill it out. I figured it out, and it's just easier for me to do it. And it tells the state whether you have enough in your funding percentage, but they didn't leave it just at your funding percentage because, they can't say if you're below 50%, red flag. They didn't do it quite that way. They say if you've got some money in your general fund and your governmental funds to back that up too, they were okay with it. So there were a lot less people thrown into what they called, well, I wouldn't use that strong of a word, that would trigger them to, what they did was if you didn't meet the formulas didn't come out the positive, they wanted you to come up with a plan, and the township would have had to file a plan, which you didn't have to do this, but that was the next step was tell us how you plan on getting out of this, how you making these positive going forward. So the state's more involved now in monitoring more, and so they're basically giving us guidelines on our parameters, and so are the actuaries. So in a sense, we have to work within those. It's not completely up to the board to, you're making the best decisions possible, but it's, it is not completely in the realm of, we'll just invest differently and we'll get better rates of return. And there's just a lot of things impacting that.
All right, thank you very much.
Oh, thank you.
YCUA is here. Could we move to YCUA because what they're proposing is a lot different rate. It's a way of doing water and sewer rates. I call it the right rate, right, Larry? Where they're actually charging for the units that you use versus the 6 units that are a minimum. Could we move to that? Is that all right? Jeff?
Good evening. Yes, at its regular meeting on August 22nd, the YCUA Board of Commissioners will consider a water and sewer rate modification to our current rate structure. Under the new rate structure, the minimum use charge will be replaced with a readiness to serve charge. The proposed readiness to serve charge rate structure is more equitable for our customers to pay consumption rate at every interval of usage. The readiness to serve charge rate structure has become the main rate method for utilities, while the minimum use charge method is becoming phased out. Our current rate structure goes back to the 1970s. YCUA is requesting your consideration for a change in ordinances to modify the current rate structure that would take effect October 1st, 2018. A draft of these 3 ordinances for the Township Division is included in your material. I do anticipate at the August 22nd YCUA Board of Commissioners meeting that the board will consider recommendation to the Board of Trustees to modify the current minimum uses rate structure and replace it with the readiness to serve charge. Before I get into the numbers of the readiness to serve charge, I would like to say that when I took over as interim director in 2012, it really came to my attention how discouraging the minimum use rate charge was to our customers. I began to receive calls from many customers. For example, I had a customer call me and ask me, I'm on a fixed income. I only use 2 units of water every 2 months. Why am I being billed for 6 units? And my answer to that was, I do apologize. I do feel your pain, but that is our ordinance that's been in place since the 70s. I had another customer call me that used 3 units every 2 months. And they said, Mr. Castro, since I get billed for 6 units and I've only used 3 units of water, do you mind if I hook up a hose to my kitchen sink and waste 3 units of water in my front yard? Of course, I discourage that, but I do understand the frustration. The rate model calculates water and sewer revenue requirements. The revenue requirement primarily consists of operation and maintenance expense, debt service, including bond covenant and reserve funds. The readiness to serve charge rate structure was put together by one of the leading experts around, Mr. Vic Kubelwasser, who is here with me tonight, of Tetra Tech, and the RTS is considered one of the best practices in the industry. If you could move to the comparison page where it says Charter Township comparison water bills. So before I really get into the numbers, I just give you a couple examples. Currently, a customer who uses 1 unit of water in the township currently would pay $59.41 because they would be billed the minimum charge, which is 6 units, even though they use 1 unit of water. With the new readiness to serve rate structure, that same customer using 1 unit of water would pay $36.43. That customer would see a 38.7% decrease. A different customer who uses 3 units of water under our current rate structure would also pay $59.41 because they fall into that 6-unit minimum. Under the new readiness to serve rate structure, that same customer using 3 units of water would now pay $48.05, a 19% decrease from what they're used to. This also applies to our customers who have sprinkling meters. Currently, we have many customers who have sprinkling meters. They fall under the minimum use charge as well. We have customers who sometimes don't use their sprinkling meters but don't want to remove them. Currently, under the current rate structure, a customer who does not use any water for their sprinkling system, who has a sprinkling meter, will pay $30.63. That same customer, moving forward with the readiness to serve water rate structure, will pay $7.47, a 75% decrease. A different customer using 3 units of water for their sprinkling meter also would pay $30.63 for 2 months. Moving forward under the new readiness to serve rate structure, that customer would now pay $17.16, a 43% decrease in usage. Now, usage across the board isn't all a decrease. It depends on the consumption that you use. For example, a customer in the township division that uses 12 units of water under the current rate structure currently would pay $94.94. Moving forward, if approved under the new readiness to serve water rate structure, that customer would pay $100.34 for 12 units, which would be a $2.70 increase per month. What a readiness to serve charge rate is, it's based on a readiness to serve charge rate for the water, a readiness to serve charge rate for the sewer, and a charge rate for the commodity use. The commodity use is the cost per 100 cubic feet. 100 cubic feet of water is equivalent to 748 gallons. Therefore, for the township resident, the readiness to serve charge for water would be $14.94 for the water. The readiness to serve charge for sewer would be $15.68 for a combined effect of $30.62. That would be the readiness to serve charge for water and sewer. Then they would be charged per 100 cubic feet of water.
That's not in our packet, correct? What you just said?
It's not broke down like that.
Okay.
In the packet, which you have up at the top, for example, the top left box, it'll say bi-monthly water bill, 1 unit of water.
Right, I followed that one, yeah.
Yep, so down at the bottom, on the, in the middle column, it'll say $30.62, where it says minimum/RTS.
I don't see $30. Oh, I see it, okay.
So
Oh,
that
wait.
$30.62 is the $14.94 for water and the $15.68 for sewer combined. Below that, where it says $5.81, that's the cost of water and sewer per 100 cubic feet of water, which if I split those apart, it's $3.23 per 100 cubic feet of water and $2.58 per 100 cubic feet of sewer for a combined effect of $5.81.
Jeff, how does that commodity, those 100, I'm sorry, Brenda.
No, go ahead. That was my next question, yeah?
How does that break into the 100 cubic feet of water into the units? Like, what is 1 unit?
1 unit of water is equivalent to 748 gallons. So for every 748 gallons of water, a customer would pay $3.23 for water.
But how does that relate to that commodity? Like, how, 100 cubic feet is how many gallons, I guess?
748 gallons.
That's what you were saying. Okay,
Right.
sorry.
1 unit of water, I'm sorry, 1 unit of water is how it's displayed on your bill. 1 unit of water is equivalent to 100 cubic feet, which is equivalent to 748 gallons,
Thank you.
however you want to say it.
Figured. Thanks.
Some communities build in 1,000 gallons. We bill in unit of water, which is 100 cubic feet. I do have my rate expert, Mr. Vic Kupawasser, if there's any questions on how we come up with the RTS and the commodity rate. Again, this is called a readiness to serve charge, but we do look at this as the right rate.
Madam Chair.
Yes, Heather?
I spoke with Jeff on the phone before just to discuss all this, and I told you someone would ask what a unit of water is. And they're like, what is that? But I think that it makes excellent sense, and I'm in support of it. But what I was really surprised by, and I just think maybe, just for everyone to know, is I said, well, I have a small family, 4 people live in my house. We never get the 6 units of water, but only about 25% of the Yucca customers use less than that. Is that correct, Jeff?
Yes. About 14% uses less than 3 units, and then another 8% uses 6 or less.
Yeah. So I was just surprised by that. And then as a whole other side note tangent, I just came back from Utah. It's a desert, and I had never been so, we just take our water for granted. Right. And so while it might increase some of the rates for different users, I think it's just another way to really promote conservation and being more thoughtful about our water usage within the township. So, thank you for your presentation on this, Jeff.
Thank you. Monica?
Madam Chair, hi, thank you. I'm sorry, I'm gonna have a lot of questions, so.
Sure.
First things first, okay, you said that okay, let's go back to the first question. The main differences between the minimum uses of water and the RT rate structure on a typical bill is what we see here. So just say if I'm a customer that's using, example, 4 units of water a month, right?
You get billed every 2 months.
Every 2, okay, 4 units of water every 2 months, because it's a bi-monthly bill.
Sure.
Is there somewhere on your form here that basically highlights what that customer's bill would look like?
Yes. If you look at that page with the squares on it,
Yep.
where it says on the top left square, you'll see where it says usage. It says 1, 2, 3, 4, 5, and 6. That represents units used on an actual customer's water bill. So if you go down to 4, under the current rate structure for 4 units of water, that customer would pay $59.41 because they're paying for 6 units, not 4, because that's the minimum use charge. Under the new readiness to serve water rate structure, if approved, that same customer would pay $53.86.
Okay, got it. So what's the average, I guess you could say, rate of uses? And it may have been answered already, but I'm just trying to make sure I understand this for my purposes, per customers. So the customers that are in Yucca, what's the average rate per uses?
So you're asking what is the average user consumption?
Yes, exactly.
The average user consumption has went down. It used to be 16 units 10 years ago, but everybody is conserving, putting in different toilets, sinks, dishwashers, washing machines. So the YCUA's current average consumption user is about 10 to 12 units every 2 months.
Okay. And if I was using, so if I was using 10 units every 6 months, I'm assuming if we go down to the third.
So then you'd go to the right square, where it goes 7, 8, 9, 10, 11, 12.
Yep.
So a customer using 10 units of water every 2 months under the current rate structure would pay $83.10. Under the new readiness to serve structure, they would pay $88.72.
So the less units of water, I guess you could say, you use, the lower the bill would be?
Yes, in this case, because that's the whole reasoning of this, was to make it fair for the customers who don't use the minimum use,
Okay.
to get them to pay what they should be paying.
Okay, thank you. And it said on your letter that we're proposing a 2%, and that's just for the sewer, that's not for water, correct?
Yeah, let me explain that. So
Okay.
what that meant, had this rate structure not come into play with how well YCUA financially has been responsible and how we have negotiated with the Great Lakes Water Authority, because we manage our water system so well under peak flows, we weren't going to see a water rate increase. It was going to be zero. And we were going to increase the sewer rate by 2% to maintain our wastewater treatment plant, incinerator, tertiary treatment.
Okay, all right. So, okay, got it. Okay, thank you so much. I have it now. I appreciate that.
Thank you. If I could just say one more thing. When you asked that question on when you use less, you're going to pay less versus the average user paying more, under the current rate minimum use system, for all these years, the users that used less than 6 units of water were paying more than their share, which now they're going to get it all back. And the average users are going to pay their share.
Stan?
Jeff, I didn't hear the question earlier. What is the percentage of residents that use 6 or less now?
Let me give you actual numbers here. In the township, there are 17,436 accounts. 2,340 of those customers use 6 units or less. Another 1,429 customers are occasional minimum users, which means each customer receives 6 bills per year. So an occasional minimum user, which we took in effect as well, would be one customer using 3 units, then 6 units, then 8 units, then back to 4 units, and then 2 units. We have those customers as well.
So they're telling me up here 22%, that sounds correct then, for 6 or less? That's a fair number?
If you want to say exactly 6 or less, it'd be 13.42%.
So only 13.4.
But then another 8.2%, which is 1,429 customers, are occasional minimum users.
Okay. Would it be fair
So
to
it's
say?
roughly around 20%.
Okay. Would it be fair to say that 78 to 80% then of residents are going to see an increase in their water bill?
Yes, that would be fair to say. Some of them very minor, yes, but an increase is an increase.
Okay.
For example,
And then
somebody using 30 units, their current bill under the current rate structure is or 36 units is $237.07. Under the new readiness to serve charge rate structure, they would now pay $239.78. So it's $2 increase. Yes, so an increase is an increase.
right. And I'm sure you've done the long-range planning for the budget and how this will affect your Yucca budget.
Correct. This is revenue neutral. So we were bringing in approximately 43 million in water and sewer revenue. We're still bringing in 43 million of water and sewer revenue.
So overall, then 78% are going to pay more, but yet that remains neutral in your budget?
Yes.
Because there's such a decrease for the other 13 or 20%?
We also have our contract communities as well, who their commodity rate goes up as well for water. Our contract communities do not pay a readiness to serve charge because we don't provide service to them, but they pay the same commodity rate as the township.
Will you be going?
So we raised the commodity rate from $3.15 to $3.23, so that makes up the difference.
Madam Chair?
We-
Just, I'm sorry to interrupt,
That's okay.
but real quick, you 78% will pay more, but you got 13% that has been paying more that offsets that 78%.
Correct.
That's going to pay more now for 40-plus years.
They've been offsetting since in the 70s, correct?
And are you going to go to the contract communities with this same plan? Or is this just Ypsilanti Township?
This RTS applies to the city residents and the township residents. The contract communities only pay a commodity rate,
Okay.
and they pay the same commodity rate as the township residents.
And then is there anybody in Michigan or in this region that are using this model that we could look at and see a long-term how it's worked and how it's gone and what the unintended consequences, if there are any?
Yeah, again, the readiness to serve charge rate method is one of the most used charges in the region, and I'll say in the nation.
Is there anybody else in Michigan using it right now?
Oh, multiple.
Can you give me one that's just close?
Celine?
Okay.
Canton?
Again, okay. Thank you.
Yep.
Madam Chair.
Yes.
I just want to make a note too that our township board, I believe every year we renew it, our water, like if a resident is struggling to pay their bill, we'll help them with that. We
Yes.
renew it every year.
Yes, we
right?
do it every year.
And of course, we'll continue to do that with the board's will, but, you know, we don't ever want any of our residents to not be able to have a basic service.
Correct. Unlike many communities, whether you have an outstanding bill of $20 or $200, if you don't pay it within a certain time, they send you a notice, then terminate you. Ours is based on an amount. So somebody with a $30 water bill is not going to get their water shut off, but we will contact them to make a payment arrangement.
Jeff, perhaps the expert from
Nick
Tetra Tech
Kupawasser.
could just tell us how many other communities throughout the state of Michigan are doing it. I know that they have talked about this discussion for probably 6 years or so, trying to study. It's probably been longer than that, yeah. And it was really put forth at a Yucca board meeting by the city because residents were struggling to pay and they were trying to conserve and not use water.
Right.
And they weren't being rewarded for that. So, and they don't pay and help, residents financially. But on top of that, my understanding is that this is the right rate. This is how you're supposed to do. You're supposed to be charged for what you actually use.
Right.
Is that correct?
That's correct. The rate should be proportionate to YCUA's cost to provide the service to the customer. And as was pointed out here, this rate structure does a better job of promoting, conservation, because previously, if you tried to save, you still would be billed a minimum, regardless. And so I rightfully so, is frustrating to a lot of customers.
Right. And how many other communities in Michigan?
Oh, top of my head, I'd have to say between 50, 75% of communities in Michigan use a readiness to serve charge and a commodity charge, Celine, Tecumseh,
Okay, that's fine. I was
Ann
just-
Arbor, maybe even Detroit. I could provide you a list.
This is where you have to move to because you can't charge more than what you're actually cost to deliver?
That's correct.
Right,
To be a valid user fee, you can only charge what it costs you to provide the service.
Okay. It was a big study we did to do it, but I think it's the right thing. I think we're required to do it as well. And I think it's the right thing to do.
I think we were talking about doing this one back when I was on the Yucca board in 2004 or something, because
It's been a long time.
Yeah.
the thing about it is, like, if you're using 1 unit or 2 units, but you're getting charged that, maybe you should just bottle it up and sell it to somebody, or like Jeff said today, just running out the thing since you're using, it's crazy when you think about it, but, so I'm really happy because I think for the people who have struggled the most, this is going to be a real reflection on what they actually are using. And it's going to encourage more people to conserve water, so I think that's always a good thing for us.
Yes, Monica?
Just one more question. Make sure I have it, I may have the percentages wrong, but somewhere in the area of let's see, get this number right, 78% of customers may experience an increase. And those customers are not using, I'm assuming, conservation outfits right now. Is any way that information could be shared with all the general customers in regards to
absolutely.
conservation? Because either way, looking at from what you presented, those 78% of customers are going to get an increase without knowing, different methodologies to conservate the use of water. Does that make sense?
Absolutely. Currently, in the past.
Can you speak at the
of course,
microphone?
I'm sorry.
I'm sorry, the
Of course,
person-
our water and sewer rates pretty much increased every year because the Great Lakes Water Authority, formerly Detroit Water and Sewage Department, would increase their rates to YCWA, so we would have to pass it on. So we've always had a water rate increase, not that we want to, but that's what happens. But in this case, since it's one structure going to a different structure, we do intend on sending out a letter to each customer, also providing information on our website where a customer can put in 12 units of water, and it'll calculate what their water bill is going to be.
So if they use less water, they will.
And
Be
to
able
your
to
point,
manage
yes, we
their
can
bill.
absolutely add conservation ideas. 1.6 gallon toilets, high efficiency washer, a washing machine, absolutely.
All right. Heather, did you, no? Are we good? Okay, any other questions? So there's 2 readings on this, and the city of Ypsilanti voting on this as well?
Theirs is on the 28th.
Okay. All right, thank you so much for coming.
Thank you.
on.
Thank you.
I'm going to go to the consent agenda and starting to review the agenda. We have minutes of the July 17th work session, closed session, and regular meeting, and July 24th special meeting. Are there any questions or comments? The only one comment was on the special meeting minutes on page 141. It just said motion failed, and if we could list out the votes. On page 141 in your packet, it just said motion failed, but it didn't have the votes listed. It's on page 141, special meeting. If you could just look at that. And statements and checks, any questions? Treasurer's report? I would like to recognize Christy Troy is here, and thank you for your quick study and helping out with the audit and tax collection and everything during a difficult time. It's appreciated. Is there a general legal update?
A board meeting?
Okay. Under old business, we have the second reading resolution 2018-18, which is for the Township Park, Section 61. Are there questions on that? Did I skip some? No. Basically, the state law change in air and gas soft gun or a paint ball gun can now be carried in the township parks, but our ordinance prohibits them from being discharged in the township park. So it's aligning up with state law. Any questions on it? The next item is a resolution 2018-21, which is established township supervisor salary, which was tabled at the last meeting. Then there's a clerks and the treasury as well.
Madam Chair, I think I'm the reason that they tabled it because I wasn't here. But I have been spending some time just looking at the supervisor's salary, and I was trying to come up with how does people come up with what a salary should be, and I looked at the taxable value, I looked at population, I looked at a lot of things, and I started thinking about that we are in the Big Ten, so we're in the top 10 townships in the state of Michigan. So I went and got those, and I think in front of you I passed out a list of the top 10 that we belong to, and Brenda attends those meetings monthly or bi-monthly. And I've got their wages. All of these wages are 17 wages except for one, and I don't know. I wrote it down somewhere. But anyway, one of them, I believe it's Macomb County, is the only one that is 2018 wages for the supervisor. Our supervisor makes $79,400, same as the clerk and the treasurer right now. The average is $100,000 with those 10 communities. I took out the bottom the bottom one, and I took out the top one, and the average was $96,000 and some change. I took out the two bottom low ones and the two top ones, and it still came out at, oh God, what did I do with my notes? I believe it was $92,000. So I'm recommending that we give the supervisor a larger raise this year. I would think that we should try to get her at least in the $85,000 or $86,000 range. And then I would recommend that we go and form a commission that will look at all of our salaries and make a recommendation to the board of what any of us should be making.
I'm not even comfortable being up here with this discussion. I'm really not at all. I might go to the bathroom or something, so if you guys wanted,
Madam Chair, I was just going to add, well, I guess that's if you don't have any.
yeah, I just don't, like, I appreciate it very much, but
Yeah,
it makes me uncomfortable.
go, yeah.
Yeah, I'm thinking,
So I guess Larry, I guess I'll direct my questions to you if that's okay. When you were doing this, did you also look at the treasurer and clerk salaries for these?
You know, I did, the first one I got did had the clerk and the salary on there. I guess my concern more or less is I feel I get a fair wage. I feel that what I'm making is fair for what I'm doing. I know that I come in at 8:30 in the morning and I pretty much go home at 5 in the afternoon or 4:30 in the afternoon. I attend a few meetings, but not a lot.
Yeah.
I know that our supervisor is 24/7. And I can't tell you whether the supervisors in these other communities are 24/7. There might be some, but I kind of doubt it.
Yeah.
And so I don't think there's a meeting you can attend that Brenda's not at it. And the next supervisor, it may be a different situation, but I think by looking at these top 10, that without a doubt that our supervisor is underpaid.
Just to follow up, Larry, to that, I guess. So I guess I'd be interested in just seeing the other two full-time elected officials. And, like, I appreciate how humble you are in saying, like, that's just what I do and I don't, whatever. But I think, really, if I'm being honest, out of the three full-time elected officials, you've had an incredibly tough, year. And I would really honestly say that you probably have worked hardest out of all of them. And maybe, you can say whatever you want, but that's my opinion.
I'm a delegator, and I have delegated
I didn't doubt
a lot
that for a
to
second.
Miss Christy Croys, and I think that she has got some kudos tonight over that. Thank God for her. She stepped up. She put in godly hours in research, and so where credit's due, that's where the credit's due, right out there.
Well, it's kind of you, but, and my other just thought is I know that all of you make the same right now.
Right.
And I don't know, just from my background in labor, really, we may or may not ethically disagree on this from your, background or whatever, but I just think that the idea of solidarity among our three full-time officials, no matter who it is, because it's about the position, not the person. Like, I adore Brenda and how much she works, and, I mean, if I had my way about it, I'd probably double all of your salaries, but I can't. And so there's that. And then I guess one of my other questions, and I just looked at this in the board packet today, but you're the perfect person to answer it, is when we're looking back at our budget, you have the year-to-date comparisons from 2017 and today. And I think the last one in there is July. So every month from 2017 to 2018, we've actually had lower revenues than the prior year. So, I mean, would that be a concern of yours?
Lower revenue on what?
Like our monthly revenue in your treasurer's report?
Oh, well, no. The treasurer's report is basically, right now, we are sucking money from the township because we won't collect any township money until December 1st. So our revenues from funds are coming in. The monies that we're collecting now is with the school funds money and the library. Those monies come in, those monies directly go within 7 days. We have to turn those around and give them to the school districts, to the library, and a little bit to the county that's taking them right now. So that money is coming in and going right back out. But the township money is being taken down because we don't have any money coming in from the taxes from the township. So that'll come down, and at the starting December 1st, we'll start collecting revenues, and it'll go back up again. So that's why you'll see it coming down.
So I guess just my final two things, it's like, I really like the idea of keeping solidarity among the three full-time people. And again, Brenda, you missed this part, and I know you're uncomfortable about it, but it's about the position and not the people. And if I could give you all double raises, I absolutely would, because I know how hard.
I guess my only question, and I think that was a great thing to do at one time, but if you look at the top 10, and then look at really any of the, even if you look at Pittsfield, the supervisor makes more in all the communities other than ours. I think we're about the only one.
So if we look at raising the supervisors, I would just really be interested in looking at also the treasurers and the clerks as well.
Madam Chair.
Just having that information.
Yeah.
Thank you. Madam Claire.
Oh,
I'm
Mr.
sorry,
Larry.
Stan. I'm sorry.
That's okay. I don't have a problem with the 3% for all three because I know that's overdue because we didn't do it at the last budget because we were waiting on things. I would oppose a compensation committee. I think people elected us to make those decisions. I think it should rest with the 7 of us. And I'm not opposed to an increase, as you've asked for, Larry. I just don't think this is the appropriate time. I think it's more appropriate at the budget time in November. 3% now is fine because I think that's due. The three of you have waited throughout the year, but I think any increase right now above that would be inappropriate. However, moving forward, I would agree with Larry. There might need to be a distinction. We just talked about following other communities and doing those things. That's the same thing we're talking about here. So I have no problem with the 3%. I would just ask that we wait until November to look at it and maybe take into account the other positions if that's what we so desire, and let the decision rest with the 7 people that were elected by the residents to do it.
I agree, Stan. I just want to clarify, because I am fully in support of giving you all your 3%. That's what you're saying too, right?
Correct.
Yeah, okay. I appreciate those comments.
Yes, Monica.
Madam Chair, I would concur actually with Trustee Eldred's points, especially if we're looking at anything above that, above the 3%, waiting until we look at the budgetary matters as it relates to the township, which I believe is later in the year. I also would like to give, I guess you say, a little bit of concurrence with Treasurer Doe's point. I can actually, coming from, I guess you could say, a different world, I can see why someone that would have 24/7 responsibilities might be paid a little bit more. And the supervisor, in my opinion, no matter who it is, and this is not about any one person, has 24/7 responsibilities. So I just wanted to make that comment on the record, but I do concur with Trustee Eldred's comments.
Clerk Rowe,
Say, when will we be voting on the budget?
before the end of the year.
Is it in November? Because it'll come before, right?
December. We have to adopt it by 12/31,
Thank you, that's what I want to know.
and we're putting it together now.
But those, yeah, if I could just go ahead. Those that don't know, I can't remember what the difference was, but it was when I was supervisor, made the recommendation, probably about 20-plus years ago, maybe longer, I'm not sure. I served 2 terms, and I think we did it in the end of the first term, so it's probably been 20, 22 years, something like that, to make them all the same. And that just comes from a different philosophy, not to say that it's right or that it's wrong, but just kind of so that everybody understands, and way, coming from a place of looking at not having so much of a hierarchical organization, but one that is shares like more democratic across the board, and that we joined in, decision-making at the top, the 3 full-time officials were involved in all that, and so that's what I had recommended to the board at that time, and that's how, which is really unusual. I'll admit, I think some of the research after Larry had mentioned to me when he came back that he wanted to do this, I did a little bit of research, and some of the research, most of the research shows that that's actually the case. There are some cases where the clerk's paid more, but I think that's mostly where maybe they're doing other duties outside of their technical statutory responsibilities, including maybe some of the accounting stuff too. The thing about the Big Ten, I think they just, and this isn't taking a position, just factual and stuff. The thing about the Big Ten, that's Big Ten's based on population. And we are, I think, the 6th largest, or at least we were at one time, maybe even more now. We're the 6th largest population-wise, so we're in that Big Ten group. But also that most of the MTA actually has a website and you can go to. You can pump in, they do each individual thing. You can pump in population, and it'll give you, salaries of each, whoever you want, from trustees to fire chiefs to whoever, and they'll always do it with a category. They have to have a spread of at least 6 people in whatever that filter is that you put on. And most of those are driven, and I showed those to Larry, we shared those. Most all the wages are driven mostly by the SEV or taxable value. So Larry, I even said, well, if we hadn't had that kickback or the recession, where would we really be at today? It doesn't change the workload, because I think sometimes when you have, I think for us, our workload, especially since Brenda's been elected, I think has been, huge, because when you lose a third of your revenue, what you have to do in order to make the organization keep kicking is really huge. And I think that we've, everybody, including the employee, from the bottom level up, that we've all kind of shared in that, sacrifice or that increased workload. And the fact of the matter that even though our SEV dropped, our population has grown. So I think for all of us, the number of, residents that are needing help and support, so that workload has went up. And most, when you run the SEV numbers, which is what I did, or the taxable value numbers, when I ran that for us, all 3 of us are pretty much at the 50%, but there's what they show on that scale too, is that 25% were lower than us, and every single one of them, 25% was more, whether I ran 1.1, because I think we're up to is it 1.2 now, Brenda, or 1.3 billion?
1.5.
Yeah, so I ran a series.
1.6.
Yeah, and I'd have to tweak them all the time, I'd have to tweak them to make sure we got 6 in there, because it wouldn't run the numbers unless you had 6 townships that had that. But there, that scale ran from what we make on the 25% up to as much as $85,000 and $90,000 for 25% of the people over. So, I mean, there's a lot of, different ways that you can look at that. And then the population was a thing that really kind of threw it out of skew. So I don't know what caused that, but when you threw in the population, the numbers were like all over the board. It wasn't just clear cut, but pretty much when you ran the SEVs or taxable values, whether I ran 1.1 or I went to, because you had to always give a range, so I'd do like 1.1 to 1.2, and then 1.2 to 1.5. I'd have to tweak with them, make sure I got the 6 in there. We were pretty much always kind of at the middle, but there was a lot of townships, 25% out of that 6, so that would be, at least 2 more townships that would be over that amount, and 2 that were below it. So I think what that says is that based on how we're getting paid, it has been, kind of fair situation. It's always been set, and we just do the increases based on what the unions normally get. I know that when everything hit really hard, the leadership of the township, 3 full-time officials, took a much larger, harder hit financially than any of our unions did. That's because, we changed our pension, we had an increase in that. It was a huge change for how we actually got paid and how we did our pension and stuff. That, of course, once you lose 1 year, and that affected everybody, the compounded loss over the years. You really never, ever get those dollars back. So I think in terms of everybody being paid the same, that was just a philosophy that came out of that. That is extremely unusual, and it really was based on an idea or a thought at that time that we all shared, that we share in the responsibility of the organization. But I think in terms of the workload, I think that all of us have the amount of work that's involved in doing our jobs because of the size of the organization and because of the limits. The third of the employees that we lost, we had folks that were more at the management levels and stuff that did a lot more responsibility across the board, and that's changed for all of us, and it's made everybody's workload. And the number of things that we're doing now, we're doing a lot more stuff in terms of ordinances that makes more, people have to do more work to oversee, all those kinds of things, doing the cameras, and, is a whole nother, like special assessments were one thing with streetlights, and now there's that whole area and the whole rental inspection program that we're doing and all those kinds of things. And I think as we move into the development era, it's going to be more time consuming and more work, I think. Because you're going to do your regular, what we're doing now, and then you're going to have, and then some overseeing those projects. So I have all those information too, if anybody wanted to see those sliding scales from MTA. But I don't have a problem with doing it now, not waiting to the budget. I mean, it's, it's so close to the time, but whether or not, we do them individually, separately, philosophically, it's kind of taking a different direction.
Giordano.
Madam Chair, I guess the only thing I'm going to look at is that none of the Big Tens or many of the other communities I looked at do we all have an equal pay. I know that's a nice thing to say, but in fairness to the supervisor, if you were going to give her something that was more fair to the top 10, then we would be looking at a 10 or 11 or 12% raise. In fairness, I'm not worth 12% raise to be equal with her. I don't think it would be anywhere justified for myself. I'll only speak for myself, that if you gave the supervisor 10%, that you gave the treasurer 10%. I won't speak to anything else. That is unrealistic, in my opinion. I guess if it's the board pleasure to wait until this next coming budget, but I just think it's deplorable, as somebody would say, that we are not paying our supervisor the hours and the time that she spent with the ACM to bring that home, along with our illustrious township attorney, Mr. Winters. I can't imagine all the things that's been happening in the township that has laid on our supervisor, not on me, but on our supervisor. And if the board wants to wait until the next year, I will abide by that, but I think she deserves it now.
All right. Larry, thank you. I appreciate everything you say and your kind words. But what I heard was 3% right now, and we'll discuss it at the budget. And we've talked about a compensation committee for a long time. And it's more independent, it's not political, it's not personal when you do that. And you can reject it or not. So I can see why a compensation committee is used in other communities a lot. But 3% is what we're going to vote on, is that right?
Madam Chair,
Yes.
if I could just have a couple of words. Listening to the rest of the board members, I agree with some different points from everyone, actually. Solidarity. I think the solidarity actually is a little misconstrued, though. The solidarity comes when previous boards chose to not take an increase because our employees didn't get an increase. Or similar to this time, they're getting a 3% increase because our employees are getting a 3%. I think that's where the solidarity comes in at, not necessarily our 3 full-time officials having the same salary, because the face of any organization is normally paid a little more. Even in our labor unions, the pay structure is different. CEOs, directors, they normally get paid a little more. Even the cities, our mayors, they get paid more than the city council people. So I don't think it would be too far stretched to give an increase to the supervisor. And I wouldn't even say necessarily because of who the supervisor is now. No matter who is in this position, they're going to be the face of the organization. They should be compensated more than the other people on the board. However, I am okay with 3% now and trying to analyze it at budget time. But I do think that the supervisors should be paid more. And I am not in agreement with a compensation committee. I think we can handle it as a board. And I would like to see the clerk and treasurer's stats from the other municipalities, kind of like Heather said. So that's just my take on it. Thank you.
All right, thank you. Under new business, we have budget amendment number 12. Clerk Rowe.
Well, we have an increase in the general fund being requested tonight of $374,996, and that's for the Civic Center and Community Center roofs. That's the majority of that, but also it's for the wage adjustment for the new Economic Development Director for the rest of the year, and also a small amount to do design, which is on our agenda later tonight for OHM for the bus stop at Schooner Cove. We have an increase in the BSR2 fund for $2,400, and that's for Wayne Dudley and some other folks. I'm not sure who gets all that credit for that, but actually there's a grant that we have to actually budget for $2,400 to put windscreens on our pickleball courts. That's going to help. There's been a family that has a foundation that wants to do that for us, and that's great. Anyways, in 14B, district fund is $857. That's for PTO payout. The building department fund is $73,000, and that's to turn those antiquated records that we have all on paper into electronic format. And that's with a contract and an agreement that is on the agenda later tonight for graphic sciences. And for the increase to the hydro fund of $47,760, and that's for, which we kind of already internally administratively approved due to the emergency, and trying to get that thing back on track so that we can get back to making money for a change order for generator number 2 at the hydro. Any questions?
Are there questions or comments on the budget amendment? The next item is the first reading on we talked about it for the water service rates. And the second one is for the sewage disposal rates. So water is 0, is that correct? And sewer?
Well, there's different changes. They're all listed out based on the size and the usage for both of them, water and sewer. And then one we're getting rid of.
There's 0% increase on water. I think it's 2% on sewer. That's what Jeff, or can someone go to the microphone and help us out here? I want to make sure we know what we're voting. I mean, I know we're going to the right rate, but we still have an increase.
The 3 ordinances on the table right now is for not a rate increase, because this rate structure is revenue neutral. So the 3 ordinances on the table right now is the rate structure, the RTS structure for the water, the RTS structure for the sewer, and the surcharge, which basically is being removed but is being incorporated into the RTS and commodity rate. The 2% sewer rate increase and the 0% water increase is what we were going to incorporate in the old water rate. Had we not thought about the readiness to surcharge structure, we were going to come to you tonight with the old rate structure with a 2% sewer rate increase and a 0% water rate increase. Okay? So with all that said, these three ordinances are basically for the water RTS, the sewer RTS, and the surcharge removal?
And the surcharge removal and the commodity charge.
Correct, the surcharge removal and the commodity charge.
So the increase on the water is going to be a certain percentage when you put all those numbers together, right?
Correct,
Okay,
right. 0 water,
2%.
2% sewer.
And it's all incorporated in those three
Correct,
ordinances.
right.
Right. That's what I just want to make sure I
Yep.
had that understanding.
But just to be clear, Jeff, it's not a increase related to your revenue.
Right.
But it will be an increase for 78% of the people.
Right.
Well, as far as revenue, a 2% sewer rate increase and a 0% water rate increase is a net effect of 1%.
Right.
So YCUA will receive 1% more revenue,
Correct.
1%, than last year.
Madam Chair,
Yes.
this is related to the ordinances, but a little more just about how, when you send out this notification to our residents, how are you going to explain it in a user-friendly way?
We'll try
It took
to.
us quite a while to.
We will try to, as Monica, I think that's what she was alluding to, we will definitely try to express this in layman's terms. And I'm welcome to any input from any one of you. Absolutely.
I mean, for I really liked the breakdown of the chart, like this is what it was and this is what it is.
Sure.
I like.
We can show what it was for a minimum use of, for example, the 1 unit, and then moving forward with the readiness to serve charge, we can break it down, what the readiness to serve charge is for water, what the readiness to serve charge is for sewer, what they are together, and as well as what the rate is per 100 cubic feet of water.
Jeff, I'd recommend something different. If you're going to send a letter out to people, they're going to look at that language, and most of them, as most of us have already alluded to, it's confusing. Maybe you just tell a family of 4, if you use the dishwasher, flush the toilet, take this many showers, water your lawn this often and for this long, this is where you'll get to. Something that way, so they understand it in that term.
Absolutely.
Or this is, because you told me what a unit is, a cubic,
Right.
whatever.
100 cubic feet.
740 some.
48 gallons, yeah.
Gallons in a cubic
Like,
foot, yeah.
maybe what does that look like? Like if I take a 15-minute shower, how many gallons on average is that?
Correct.
Also, that's so long, guys, just cut it in half, okay? But
Shower and a half, right?
Yeah, and just for your knowledge, a typical shower head puts out 2 gallons per minute.
2 gallons per minute.
And just for an example, if you had a sprinkler in your front yard, an oscillator, that just runs back and forth in your front yard. If you run that for 8 hours, it'll use 1 unit of water, which is 750 gallons for 8 hours. Yes.
Couple questions,
Madam?
sorry. Yeah, I know this is obviously, we're connected through the Great Lakes Water Authority.
Correct.
So I guess, and there's a lot of communities that are connected with the Great Lakes Water Authority. Would you say a majority of the communities are going to this RTS rate?
As Vic Cooperwasser stated, 75% already are there already. We're one of the few. We're one of the few utilities who still have a minimum use.
Okay.
Maybe 5 or 10 left, maybe, if I.
All right, thank you.
You're welcome.
And also, this could be a suggestion, I guess. Yes, all what Trustee Heatherow and also Trustees Eldridge have mentioned is great. But in the same aspect, just suggestion is you can take the average water uses over maybe, I guess you could say, the year period,
Okay.
right?
Yep.
And you can calculate how much that is, how many units they're using, versus how much would be, right, with the new, if approved, RTS. So basically, customers can see the breakdown.
difference.
Right, and they'll know how much more or less they are going to be paying.
Absolutely.
It's just a suggestion, but, to make it simple for folks that may not, honestly get that if you take a 15-minute shower, if you cut it down to 5, you're going to be saving this. If you break it down just by money and
Sure.
dollars, a lot of people get it real quick.
That's a great idea, absolutely.
Perhaps by the next meeting, you'll have a draft letter that we can look at.
Sure.
I mean, I think that'll help.
And information.
The letter that you would send
Conservation,
out.
yes.
Yeah, to the customers. So the commodity rate for the communities, did that increase?
There wasn't one before.
Yes,
Okay.
yes.
What was it?
It was $3.15, now it's $3.23.
Okay, and that's what you charge to other customers?
Contract communities.
Contract communities.
Yes. The city pays more, right?
Well, that commodity.
And the sewer was 258, was that increased as well?
Well,
The commodity rate?
on both of those current commodity charges, you've got to, in the case of the township, add 5% because of the surcharge.
No, right, but I was just asking about the commodity rate for water and the commodity rate for sewer,
Right,
for charging contract communities.
yeah, and currently, they don't pay the surcharge, they just
Right.
pay the rate. What I'm talking about is when you're comparing apples to apples, under the current system, the commodity charge is, yes, the charge, but there's also a 5% surcharge added to that. So that's really what you've got to compare to the new commodity charge, because there's no more surcharge when you compare the two numbers. That's what I'm trying to say.
Was it 5% on the commodity or 5% on your usage?
Right now, the 5% is applied to the minimum charge as well as the commodity, and in the city of Ypsilanti, it's 60%.
We'll keep reading it.
Can I ask a question or say, make a comment?
Yes.
So when you said that the changes is revenue neutral, and then you said it was 1% when you divide them, it's not really revenue neutral because you're building in a raise or a increase, right?
1%.
Right.
Right.
And that's 1% to the revenue stream of Yucca as long as everybody uses what you
Correct.
think they're going to use.
Correct.
All right, thank you.
But the objective, when we were working on the RTS, was to be revenue neutral
Gotcha.
when we started.
No,
So
on
now
that piece of it.
Correct.
right.
Like next year, if the Great Lakes Water Authority applies let's say a 6% water rate increase, we'll come back and say, well, they increased our rates, we're going to have to increase ours a bit.
But that's separate from the RT, the
Readiness to serve.
readiness to serve. That's the one that you made revenue neutral based on the units that are used currently. Kind of?
If I might take a shot at that,
Yeah.
I think what we're referring to is that whatever the revenue would have been raised under the current rate structure, whatever that number was.
Correct.
The intent is that under the new rate structure, proposed rate structure, that total amount is basically the same. That's what I understand to
got
be
you now.
revenue neutral.
Correct.
How those
shifted
funds
it.
are collected between users and their usage, that changes. Some bills go down, some go up.
Thank you.
Attorney Winters, have you had the chance to review? I know Tom Daniels was supposed to send to you, but maybe by next meeting.
I've read the ordinances, and I think that probably everybody's kind of saying the same things about what you're trying to achieve. And maybe between now and the next meeting, I can also have a more dialogue with Tom, maybe yourselves, and maybe I can, with some degree of clarity, try and maybe summarize everything.
We had a 3-hour meeting at Yucca on it, and
Yeah. Yeah.
Take a shot at it.
I can see.
Yeah, it's the
not
same
simple.
process in the city. They have a 60% surcharge. Their surcharge goes away, but their 60% surcharge is basically incorporated in their commodity rate and their readiness to serve charge. So their RTS and their commodity rate is much higher because they had a 60% surcharge.
Madam Chair, I had one more question.
yes.
I guess my question would be along the fact that is there a possibility, right, that information can be a little bit more clearer even for board members. So with that, is this something that would be needed right away? Like, you know, does that make sense? For clarity purposes, because
The
I'll be
structure?
honest, I'm still a bit confused.
Well, this is first reading, and we'll have a second reading, so
Okay.
we'll have time, and normally we would, every year we do the rate increases.
Right, that makes sense.
This is a whole,
This
This
is
is
a
a
complete new
change.
structure.
so it's a lot more in-depth, but because the budget is September.
September 1st.
Yeah, and so they adopt the rate in October historically, right?
Correct.
We tried to do it in August, but it never worked out.
Correct.
And this is just a big change from it, but every year we do.
Yeah, that part I
Yeah.
get. Yeah, I totally agree.
So we have another opportunity, we have a month before our next meeting, and you can meet with Jeff and his team and to get more information.
Sure.
But I think if you had it typed out and it was clear, like a
Okay,
white
we'll do
paper
that,
on
yeah.
it, I think that would help a lot too.
Okay.
And what you're going to send to the residents, you know, we can help provide feedback and stuff like that. We have to do this.
Absolutely.
It's the right thing to do. So I do know that, and just explaining it to people might be a little harder, but basically you're charged for what you use.
Right.
That's the bottom line.
You don't have the lower users, the minimum users subsidizing the
That's
large users,
correct.
because that's what you got going on for 40 years.
And point of clarification, Madam Chair, it has to be done by October?
In order to go into the,
Their budget.
September 1st.
yeah.
Okay, all right,
Their budget is different.
all right. Thank you.
Thank you.
All right. The next item on the agenda is a request, approval of proposal from OHM for a professional engineering design for a bus stop at Schooner Cove and South Huron River Drive in amount of $14,330. And this is contingent upon approval of the road commission obtaining easements in the Washtenaw County Office of Community and Economic Development and approval of the township attorney. CBDG funds will be used to pay for this.
Madam Chair,
Yes.
I just had a question, and I think it's just in regard to the bus stops. The way I understand the way that AAT works, when they look at what bus stops to put these facilities at, it's based on like usage and whatnot, and then every year they have a list of highest priority to lowest. Is that your understanding of that?
Theory.
Of the AATA, is that what you're
Yeah.
asking?
Yeah.
Yeah, you have to have a threshold in order to cite one of these shelters,
So this is something that they've cited as like,
a high usage.
area.
Yeah, and it qualified for funding to do that
okay,
Because
through CBDG.
right.
has to be a certain income level for you to use those funds.
Oh, income of the AA, I understand.
Yeah, it falls in the low to moderate
Which
income
is
area.
directly related to how many people ride the,
No, it's not necessarily. It does seem to be higher in areas that they need transportation.
sure.
But this is really the only area that's qualified right now in order
Okay.
to get these
Funds.
from AAATA.
Right.
I think they should be wherever there's a bus stop, but they don't.
Like we've been fighting, and I won't say fight, we've been pushing, asking, because there's been a lot of requests for the one on Clark Road and Clark Road and Ridge
yeah.
Road.
Doesn't-
But
I was just gonna
but
say
they
that.
keep telling us the numbers are too low, and then
They're close, but
I think Brenda and I on that CDBG, on that board, because they're actually HUD dollars, that's why the funds have to go in areas that are specifically designated to be low to moderate income based on a federal standard. And so I think 3 years we've designated funds for bus stops. And
it's a
I've never
first
had
one.
such a hard time spending money in my life, because this one's like it's been real like pulling teeth with. But of course, AATA's went through a lot of changes in terms of their,
But yes, it is based on number of people using the bus.
And I will say that too, because I drive past that bus stop at Ridge and Clark, it's Ridge and Clark, or,
yeah, you're right, Ridge and Clark.
no, but now there's, no. I'm thinking of the one on the corner, it's Holmes and Ridge, right by Coleman's, right across the street there, by the Los Amigos. That expanded, so that's a newer bus stop with their expanded route, and there are always people standing there.
Maybe we
There's
should
no
look at
shelter
that
at
one
all.
too.
And it's a busy corner, so which is really another safety concern, because if you're not inside that little shelter, I mean, and there's tons of traffic there. Anyways, that's not for today, but thank you.
You're welcome. Any other?
Madam Chair, just quickly, a question. This is a covered bus stop? Okay, great.
Yeah.
And just curious, because I don't know, I was just going through my head. Are there many covered bus stops on the other side of the lake? Is this what?
This is the only one that qualifies for a covered bus stop.
Really?
Yes.
Maybe that needs to be looked at. I'm sure there's.
Well, the more,
There's one in West Willow on Tyler.
Yeah, but, yeah.
And there's, we have a couple other ones in the town. Walmart.
Walmart finally got theirs done on Hewitt Road, yeah.
I mean, there's not many.
Well, we had to, right.
Yeah.
I mean, it's,
There's some, I don't know, I just feel like there's other high-uses areas on the other side of the lake that might need to be also considered for a covered bus stop, but maybe that's discussions that can be had with AAATA in the future.
They gave us the list.
yeah, they have a,
Yeah.
and you have to have sidewalks going back and forth to it, it has to be accessible. I mean, there's like a list of things, criteria that are needed before you can do that.
I just had a quick question. We were talking down here. Why is this not paid for by the millage that we have for AAATA?
Yeah, well, that's not part of the service.
It wasn't,
I thought there
it
was,
wasn't including any of the millage.
there were no capital projects included in any of that for that millage?
No.
I don't know about that, but I know bus shelters weren't.
Shelters aren't.
The next item on the agenda is request of Wayne Dudley, the Public Service Superintendent, for approval of a change order with Technical Environmental Services for the soil remediation during the fuel tank removal at the Civic Center in the amount of $2,453.89. Any questions on that? Wayne is here if you have any. The next item is a donation that was received from a family who plays pickleball at our pickleball courts down there and at Ford Lake Park, and they donated $2,400 for wind screens, so the ball doesn't blow around. It's a light ball, and we want to accept it and then have that installed on behalf of the pickleball.
Yeah, it's permission to accept the money first before he actually donates it, and then use the bid, the quote that they've already received from a previous vendor that they've used in other communities.
They have it installed.
Yeah. Well, actually, they will do we'll use our staff to install it with the Pickleball Association's help. It won't be the vendors installing it, we'll just be purchasing it.
Just a big net, right? Kind of
Yeah,
a big.
basically.
Well, I'm really thankful for.
Yeah,
to do
it's them
that.
stepping up. I attached a picture to the packet of how often, and almost every morning that you go drive by that park, those pickleball courts
busy, yeah.
are full, and people sitting on the sidelines waiting their turn to
Right.
play.
Right, it was Jeff Allen did that. That was a great idea.
Yep, last minute idea, and it absolutely is just expounded.
Can you see through this screen?
Yes.
You can see through it.
Yeah, there's different thicknesses of the fabric, and this is what they call 70%, so that it's 70% screen and 30% be able to see through it. So a little bit of wind gets through, but the other thing is security. You'll be able to see through it.
Madam Chair. It is wonderful that this family or the foundation wanted to do that. That's great. And I just wanted to know if this is a project that we would have to have OHM oversee for any reason, or if it's something that our staff is capable of doing.
Oh, I don't-
About that.
Yeah, this is something that this
It's just like
doctor
a
has.
pretty
yeah.
easy
Oh, yeah, pretty easy. It's a
It's a
simple
net.
process to put up.
Yeah, well, I call it a net, maybe it's not
I
a,
can
I'm sorry,
barely
Stan?
flip my car seat in.
Yeah, it's simple with using just simple wire ties. As a matter of fact, there are specific wire ties that break away in a strong wind so that it doesn't pull the fence down if you get a strong wind or something like that. This company has really thought this through, and so is the Pickleball Association. that's recommending this. So.
Perfect. Thank you.
Someone just asked me what color was it going to be?
The Park
Green?
Association, the Park Commission recommends the royal blue, which is the same color as what the courts are.
Oh.
Just kind of make it pop a little bit.
Okay.
Again, there's a picture in
Yep,
your
there-
packet
we got 'em
of the
here,
court and the possible color configurations that are there.
Okay. All right, thank you very much. The next item is the request of Mike Sarin, a hydro operator, for approval of change order number 2 from James Liffel and Company for additional work on generator 2 in the amount of $47,760, which is budgeted. Are there questions on that? This is that big project that they're doing, and they have to get, this is the company that's doing the work on it, and hopefully it'll be back up and running soon. The next item is request of Mike Razik for approval of the authorizing documents for conversion services with the State of Michigan Records Management Services and Graphic Sciences to convert paper property files to digital images. Michael?
Good evening.
Good evening.
Upstairs near Human Resources and Accounting on the second floor, there's a whole bunch of very large, heavy filing cabinets. Most people don't realize that each wall of files on each cabinet actually spins completely around, and there's duplicate rows on each side of those big cabinets. There's 18,646 actual parcels of real property in the township. That was as of last week. When I wrote this, each parcel has a very unique parcel ID number. They use the Sidwell unit validation system. Our real property starts with K11, and then there's a series of numbers. All of those files up there are in exact sequential numerical order according to their Sidwell number. And since 2000, OCS, both building planning and code enforcement with ordinance, has been creating new records and storing new records digitally in the BSA software system and in our network filing system. But prior to that, for I don't know how many decades, it was all paper. So any building planning or code enforcement record that we still retain that was generated prior to about 18 years ago was paper, and they're stored in those files. There are also a very small amount of assessing department records in some of those file folders. So there's an interest in converting those to digital, both for longer-term quality retention of those records, but more importantly, using two different storage systems for data, one being BSA, and then we frequently, almost on a daily basis, have to access old records for various reasons. We have staff. If you spend enough time up there, you'll see them going back and forth, wearing out the carpet, trying to find those files, make copies if they need them to fulfill FOIA requests and for a lot of other things. So we contacted Graphic Sciences. They came in. They have the sole exclusive contract with the State of Michigan Records Management Division to perform these services. So this is a sole source request. They are my ideal vendor, and they're the only one authorized to perform this work currently under supervision and monitoring of the State Records Office. So Graphic Sciences came in. They said we've got about just under 700,000 individual office-sized documents, a little over 700 large format drawings and sketches. And they're proposing to send a team in here, box them up. It's going to take about 2 days, and they estimate 300 to 400 boxes. They then transport them to their production facility. I think it's in here. I think it was Mount Clemens or somewhere up in that area. And they'll convert them to a digital format. We'll get them back on DVDs in PDF format that we can then upload into our network, and then maybe in the future actually attach them or figure out a way to automatically attach them to the BSA record to match those Sidwells. The process is going to take about 10 weeks. During that time, as we need to access records for specific reasons, we can contact them, and they'll provide a copy for us to review, usually the same day that we request it, as a part of our workflow. The estimate given by GSI was $68,583. That was an estimate based on their observation and their estimates of what's there. They told me that under normal circumstances, there could be a cost variance of about 5%. That's their experience. So I asked for $73,000 budget amendment, which is a little bit more than that 5% in the event it does run over, which it probably will. I think that's about it. I did want to say the request is as written, except I put contingent upon approval of the budget amendment. That's before this agenda item tonight. I'd also like to add, if I could, also contingent upon successful completion of a test sample. GSI, Nancy Rybakowski gave them a randomly selected, I think it was 30 or 40 files of different types, and they run tests. The state monitors that. They provide it to us to make sure it's acceptable. They called yesterday. We expected it back by now, and they called yesterday and said they ran into an unexpected glitch. They didn't realize that we're one of few departments that actually have color photos and color sketches. And so that makes a difference on how they do it. It does not affect the price we pay, but it does affect the file size, how much space those files are going to take up on our network. So they're going to run it in all three possible options presented to us. We'll talk with IT and we'll pick the one that suits our operation the best. But I would ask that it be authorized tonight, but we don't sign it and execute it until we get that sample back and we agree on the product we're going to receive, which should occur within the next week or less.
And the attorney approval.
And the attorney review of the authorizing document, which is essentially a scope of work.
Mr. Winters, do you have any comment?
Just one question, Mike. I know back when Karen and I were talking, when they had the digital conversion on the minutes and everything, there was a concern about anyone taking all of our documents off-site at one time. And so, not to be doomsday, that there could be an accident where there's a fire, et cetera, et cetera. My question was, is there any possibility of doing the boxing in phases so that not all of the documents are off-site at one time, only because something, can go wrong, it does?
Yes, we did discuss that with them, and if we want, they'll do it in 50-box increments, which will just add maybe, I don't know how many extra days to the process, because transportation days for each sequential stack of 50, but it's going to be close to 400 boxes total.
I was just thinking out loud with the board, with the previous experience where there's a mail truck that has
I understand.
burned up and they just said, knowing sometimes the black cloud that hangs over our heads, sometimes I just thought maybe if you do it in a phase, it gives you the assurance that they're doing it and they don't get maybe lost or damaged, and all at one time all the files are off-site.
It's probably a wise thing to do. And then the final thing would be to figure out how you want to use that space that's going to become available upstairs. It's a nice little area.
Thanks.
I would suggest two things, as I didn't necessarily see it, is one, when I did mine, they actually can put on CDs, they have these what they call silver CDs that are supposed to last like 10 years. So I got those, and I actually bought 2 safes, so if you want to get them and, use our safe system. And 2 is because until we actually get the software to manage and make sure that it can't be manipulated, that even though you're putting them on the server, it's not considered under the retention files, which I know he mentions in there. This township intends to group the records from different series. It does so with the knowledge that any permanent records are included in a single document. The document's got to be retained permanently, or the permanent records must be removed and stored separately before you can destroy them. So I think just got to be really careful until we get that software that doesn't allow for the documents to be manipulated. So that was one thing I would really make sure of, is that you got the silver. Have them run their 2 sets of CDs and just have them include that in there if you don't already have it. CD that you can use to upload to the server, which is a really big deal too. So how you have those, you might want to check with Travis to make sure how you index those is a huge deal. I know when we first started, Dave was here, and it took him a lot, and Lisa understands, I think, more about it than I do. I can talk about it in general terms, but Dave Maynard, it took him a lot of time until he told me exactly what he needed to make it easier to get those documents loaded on the silver. And then the third thing was get all your, it doesn't make sense to have two separate places, so maybe, I don't know how you search them electronically, but get all your files that you have electronically now into put onto those silver CDs too, so then you can just have them all located in the same place. Is kind of what we did. So we did all the paper documents first, but then we had them go back and take all the minutes that we already had electronically, so they didn't have to do them page by page, and then we just had them, that was real easy, and I don't even think he even charged me for that, just to take them and put them in the same place, so that was just recommendations.
I'm sorry,
Good idea.
it's 7:01. We gotta wait to.
Work session ended at 7:01.
Roll right into the regular meeting. If you stand for the Pledge of Allegiance and a moment of silence.
Pledge allegiance to the flag of the United States of America,
To the republic for which it stands,
one nation,